Hello, I'm Larissa Adams from Hardman Co. and welcome to Hardman Talks. I'm here with Richard Jeans, our technology analyst, and he's here to give us an update on AI. So Richard, how are you doing today?
Very well, Larissa. Thanks.
Great, good to have you. So what are you seeing in AI developing from a UK perspective?
Across the UK listed universe, AI is evolving at a moderate pace. We're seeing very few new listings in general, and that includes in the AI-related businesses. In fact, we are losing companies through takeovers. That includes Darktrace, as well as delistings among smaller caps. But the bigger picture, there is a lot going on as model development broadens and accelerates, and all enterprises need to position themselves for AI.
Yeah, and how exactly do you define an AI company?
An AI company develops or incorporates artificial intelligence technologies into its products or services in a significant way that typically involves automation, data analysis, predictive modeling, or intelligent decision making. Applying that to the UK, there is just a small batch of listed companies where you could say AI is a significant factor in the business models, but all companies will be involved in AI in one way or another. AI will creep right through the economy in a similar way as software and the internet and e-commerce have done. Everybody will need to adapt. It's a bit like moving from the horse and cart to the automobile. Unfortunately, though, the US big tech companies dominate the AI supply chain. So this means that they stand to reap most of the rewards for AI.
Okay, and how do you define the AI supply chain?
Well, the AI supply chain extends from hardware through to cloud infrastructure, data and storage, model development, and the apps that run across the top. So in the US big tech terms, it starts with NVIDIA in the hardware, Microsoft, Amazon, Alphabet, and cloud, Microsoft and Meta and apps. Of course, it broadens out much more than that, but the big tech players they dominate, and that is reflected in the say the Magnificent Seven, which market capitalization is around about a third of the S&P now.
Okay, so let's maybe look at the markets and how have UK AI companies been performing lately?
Among AI-related shares that I have been tracking, we have seen a mixed performance over the last year or so, as small caps and micro caps have mostly struggled, which really reflects the challenges at the smaller cap end of the market. While at the larger cap end, Darktrace is being taken over. It is quite a challenge to track UK AI companies because it is difficult to determine number one, what is an AI company, and there are very few of them, and this is in the context of an overall listed universe that is in sharp decline. So I am looking at from the angle of those technology businesses which have AI. AI is more significant to their investment case compared with those where it's less significant, but this is increasingly murky and will get murkier.
Okay, so maybe just expand on that a little bit. Why is it murky?
For instance, some traditional software companies which have had no presence in AI are doing deals with the big tech companies, big tech AI companies to gain benefits of their AI solutions. Similar moves could also transform other industries. There is, of course, the issue of marketing, and a lot of companies push the AI term to the limit. So an AI company can employ their own developers and data scientists to do their own machine learning process, but any business will be hard pressed competing with the large established AI businesses. So more likely they will link into established LLMs or with APIs to take advantage of their established technology, which they've got no hope of building themselves. Also, some companies they've done deals with the big tech companies like Microsoft. I'm thinking of UK companies like Aptitude and Craneware to wrap Microsoft AI capabilities around their own solutions. I think this could almost be regarded as a default position for established enterprise software businesses. And going forward, I believe that AI will filter right through the economy as software and internet e-commerce have done. Companies that adapt to the change will be in a position to be winners within their respective sectors, while those that rest on their laurels are likely to be disrupted.
Yeah, makes sense. And how does that fit in with the US?
In the US, NVIDIA has broken through the $3 trillion market cap. When you see articles in the media suggesting that NVIDIA could reach 50 trillion, you have to be skeptical, and you have to ask, perhaps this is the top of the market. After all, the US economy is around 30 trillion, and the entire US stock market is around 60 trillion. And the Magnificent Seven now represents around a third of the S&P 500. The top 5 companies are around 29%, which I believe is record levels. This reflects the effective monopolistic positions these companies have been able to establish. The question is, what could catalyze a change to that? Whether it could be a change in the US administration, antitrust actions, or new competition to be encouraged to emerge, or perhaps changes in the economic backdrop. In the US, small caps have underperformed the NASDAQ since before the global financial crisis that was 2008. So it's been going on for over 2 decades. And this goes against the traditional theory that small caps could outperform, they should outperform. And clearly this is a result of the big tech companies being able to becoming so dominant in their spaces.
Okay, so let's talk about how investors can play this. Where do you see the best opportunities from a UK perspective?
Well, I've previously highlighted 5 strategies. The first one is to invest in the established, highly rated US big tech companies. The second was to look at the UK-focused businesses, AI-focused businesses. Most of these are at the small cap or micro cap level, and the trouble here is that these companies are much more highly risk, very high risk, and it's very difficult to build a broad portfolio of the of these businesses. There's very few of them. Thirdly, identifying existing companies or industries that could benefit from AI, and I've highlighted technology services businesses, which could take advantage from implementing AI transformation projects. Fourthly, buying shares in investment trusts, investment companies that have significant exposure to AI, and finally, underweighting stocks or industries that could be disrupted from the AI revolution. I think the one area that's most interesting is technology services companies, which are in the best position, arguably in the best position to benefit, as they could be involved in delivering the AI projects across the broader economy. And they also benefit from the increased complexity in the IT backdrop. And this was probably a consideration in the recent in the acquisitions of Kin + Carta and Alpha FMC. The big players in the UK market, big technology services players, are Computer Center, Softcat, and Bytes. Small caps such as TPX Impact are bullish on AI, but are very early stages, while Sys Group is transforming itself in preparation for the increased demand from AI projects.
Okay, brilliant. That is so helpful, Richard. Thank you so much. I think that's all we've got time for today. But to our viewers, please don't forget to like and subscribe to our channel. We appreciate your time, and do share your comments below and hit the like button. Otherwise, we'll see you back here on Hardman Talks next time. Thank you.